Hi guys, thanks for tuning in to another episode of Nuggets News. Today I welcome a very special guest, and that is Dave Balter. So he's a serial entrepreneur, venture capitalist. He's now got a business in the crypto analytics space. So I just can't wait to get into so many topics, and you guys are going to absolutely love this one. So Dave, thanks for joining us.
Thanks for having me.
Well, for those that haven't followed your work, do you want to give us the, short version, because you've done so much in your life in the non-crypto space and now getting into our industry that everyone loves so much?
Yeah. So 3 years in crypto, so newbie in some people's parlance. Run Flipside crypto business intelligence firm. We can get into that. Before that, this is actually company 7 for me. So lots of startups, typically venture-backed, usually in the data and product space. And if all goes well, we grow them up and we sell them to somebody or let them live their life in someone else's hands. Venture capitalist, partner in a firm called Boston Seed, out of Boston, Massachusetts, in the U.S. And lifelong learner. Maybe I'll finish with that. I'll learn anything.
So what sort of companies and what's your passion been, I guess, over that time? When you first started out, what was your maybe first idea, and how did that change? What did you learn along the way? And I'm sure we'll get into the more details of all this throughout the interview, but what's the sort of basics of what your favorite things to do?
In Flipside or the earlier businesses?
The earlier businesses.
The earlier businesses. Okay. Yeah. All right. Well, my first company was totally accidental. I was working as a clerk in a retail store, and another clerk said to me, "I have a company. My partner hates me. Will you be my partner?" And I was like, "Yeah, sure. That sounds like a great idea."
Yeah.
That didn't work out so well. I know why his partner didn't like him. That was a promotions business. Ran it for about 5 years. Broke up with him after about 2. Then took over the company. Ran it. We made merchandise for bands and big entertainment studios, etc. Sold that in 2001. The business I'm probably most known for is something called Buzz Agent. That was started in 2001. That was a light bulb idea. I'm a marketer at heart, and the idea there was, this is pre-social. If we invite customers to try products and services of all sorts for free, and we give them those, they're going to go out and talk about those in the market. And when they talk about those, that's going to generate sales. And if we do that sort of methodically over and over, we have a business. We can go to all the big manufacturers and consumer packaged goods companies, and we can say, "Hey, we've got hundreds of thousands of people who will try your product and generate sales through word of mouth." That worked really well. We grew that for about 10 years and then sold that in 2010 to Tesco, the big retailer out of the UK. About 1 million Buzz Agents out there trying all sorts of products. We let them try cars, we let them toothpaste, everything, candy bars, all sorts of stuff. And then more recently was a company called Smarter. That was a business that did skill assessment through machine learning algorithms. We could validate anyone's skill in anything in 10 questions. I won't go into all the math, but it was pretty crazy stuff. So you could, "Hey, I want to prove how smart I am about cryptocurrency." 10 questions later, we could predict your level of skill next to every other individual in the world. Excel, Adobe Photoshop, whatever, we can do it for all of it. That one we sold to an online education business called Pluralsight in 2014. And then some of the team that built that actually became the team that founded Flipside Crypto.
Fantastic. I always love hearing entrepreneurial stories. As someone that worked for others, and I had a different spectrum of bosses with different business approaches. I saw some good and some bad, and I guess tying it all together and constantly learning in everything that we do in the crypto industry, just every 6 months that you're sort of pivoting slightly and it takes a new direction. So I guess that leads us to Flipside Crypto. Followers of our channel know that we love technical analysis, but particularly fundamental analysis and anything to do with the on-chain data, sentiment, or analytics. So you guys are really focused on analytics, particularly on-chain behavior of the users as well, and the actual projects themselves like hearing about this. So give us the rundown of what Flipside Crypto does.
Yeah, so the fundamental technology we have is something called chain walking. And what chain walking does is we integrate it into a blockchain. We have about 40 blockchain partners at this point. And it, in essence, tracks every transaction, every movement, but labels those movements by stakeholder type. So first group, we identify our exchanges, then miners, actual top, percentile customers, dApps, validators, everything broken out within the chain. What we do with that is two things. One, we use that technology to license to the blockchains themselves insights that might help them grow. So I'll use an example. A chain wants to understand if their miners are hoarding rewards to create liquidity droughts in the market, impacting price. And they don't know if it's happening. They don't know who. They don't know when. And so we will show them the token flows of those rewards. We'll show them when they go to exchanges, which exchange will show who's staking and when. And then the blockchain can, if they need to, talk to one of their miner groups or understand why there's a liquidity drought, et cetera. So there's all sorts of use cases like that. The other thing we do with chain walking is we use that data to inform a rating system. It's called FCAS, Fundamental Crypto Asset Score. You can see that on CoinMarketCap and Masari and The Street, MarketWatch, StockTwits. And it's basically a health metric. If I want to know whether this asset is, fundamentally healthy, is it growing its customers? Is its developer behavior healthy compared to everything else? I want to be able to track that. So we give away FCAS for free. You can actually get a whole tracking tool off our website to use FCAS to create investment decisions, things like that.
And I'll link that down below, guys. And it's fantastic. It is one of those. There's probably half a dozen now. We're so lucky. I used to back in 2017. I used to joke I had like a secret indicator, and we just used to look at things like Google searches and the amount of people joining exchanges and Facebook groups, and that was kind of like the analytics. And these days, it's just 100 times better than anything that I used to have back in 2017. But I imagine. Well, I am a firm believer, and it's probably even changed my opinion in recent months, that there is just so thin trading happening of a lot of these assets. And even the other day when we saw Bitcoin and the flash crash of whatever, Black Thursday, I think we're calling it, and BitMEX had to shut down and do the circuit breakers, because I actually think we would have gone to zero because of their liquidity engine. But price discovery happens in such a thinly traded world, and that's even more so for other assets. So I'm just wondering if you could maybe give us some interesting examples, because just off the top of my head, I'm thinking things like, Tezos, where 80% of people are locking it up. XRP is one you've got on your site where we've got the metrics about how much the Ripple company hold. And do you see things like that where it is just so thinly traded by the time you take into account the whales, the miners, the stakers, this, that, and the other?
Yeah, so absolutely. So one thing to mention, also publicly available and free, is a tool we have called the Data Cooperative. And what that allows you to do is actually see transactions moving between these stakeholders in the last 30 days of supply, in real time, And so what's in there, as you'd expect, are many of the exchanges, and you can see how much supply they're holding at certain times. And yes, you can see movements coming out of escrow, and how much, maybe a Ripple will actually distribute from escrow to the exchanges and how much they'll maintain. You'll see, whether Tether is minting or not, where it goes when they do. So that's a great way to look at some of those supply metrics. I will say, probably in the last 3 months more than ever, we've been asked for this. Can you tell us which exchanges have which supply and when? And this is coming from very big companies who are, the ecosystem is getting smarter. And I think everyone's realizing where that supply is living, who's got the ability to, create market makers or not. That is that is changing everything. And so we are able to capture that data and share it with our customers.
Have you had any great examples? Because I know a year or two ago we did a similar interview with a similar smaller company, and they were just saying things like it's very clear when a sort of mid to small cap project sends a heap of coins to Binance or their team, and then you see the price dump the next day because they're selling coins there to sell. So do you guys see examples of that all the time?
Yeah, absolutely. So Ripple, once a month prints 1 billion new tokens and distributes them. The majority not heading to the exchanges, let's put it that way, to other places. You also see with Ripple, actually, most of the interaction happening, or XRP, happening during the weekday versus weekends, which gives you an indication that it's mainly an institutional user versus a retail customer.
That's interesting.
Tether, we're not seeing any burning. So you can see that continues to be out there. And you're actually seeing Tether's pacing of pair trading growing incredibly fast on Tron right now, and reducing in Ethereum, and you can see that in real time as it's been happening. So they're shifting over to that platform. So all those are real cases of things what we'll watch. Different people might use that information differently. So yeah.
In defense of, and I can't believe I'm defending XRP in some ways, but I'm already seeing the commenters saying, Ripple doesn't sell that many each month, or they put them back into escrow, or they don't sell them on exchanges. So do you see any particular trends of where those tokens are going?
Yeah, so I'm actually I'm a fan of XRP and Ripple, so I don't, I'm going to get beaten up somewhere in the comments, I'm sure, for that.
Yeah.
Let me tell you why I'm a fan, actually. Because XRP and Ripple is probably one of the most real companies in this space today. Okay, they have actual customers, they generate real revenue, okay, and they secure transactions between banks and people who are trying to put money into the market. It's probably the best use case of anyone. Why is crypto here? Okay, and I could point to a dozen other chains that I think are building better technology or are more decentralized or whatever, but they don't have any revenue. And I'm a business guy. Like, where's the revenue? So there's revenue there. That's why I like XRP. Okay. Don't beat me up, XRP army or anti-army. Don't beat me up.
We'll end the interview there, Dave. No, I'm just joking. But I'm sure.
Jack, I can tell you what I think about Tron. Then everyone will really go away.
No, well, let's unpack this a little bit, because I'm sure people in the comments they can hear my stomach squirming. But no, so I'll tell you the story. Back in the day when I was a cypherpunk in 2012, obviously, we hated the banks, and I've kind of come around a little bit because I've got lots of friends that are working with Ripple or XRP now. And there's a little Aussie company called Flash FX, which just joined that Pay ID network, along with Independent Reserve and other Aussie exchanges. So I do agree that XRP have got these products that are now being used for instant transactions, and they're getting revenues. So I don't mind them that much, but I do think that it's a very different mission to the whole original crypto sphere. But where was I going with all that? So yeah, they've got the revenue and the token, but that's the thing that I don't necessarily know if you need. So a lot of the time we hear these things like, the Ripple net or whatever it is, technology is great, but why do you need that token in there as well? So what are your thoughts on all that?
I mean, why do they need the token? If you're Ripple, you need the token because it's a way to make a lot of money. I mean, I'm not speaking for Ripple. I'm not saying, maybe it's this way. There's the crypto and blockchain ethos, which is why we're all here. And there are a lot of people working hard to make that really work. The token is the driver of X.
Yeah.
In Ripple and XRP's case, yes, it's a technology and a token over here. And yes, those are not as intertwined as everybody for the core ethos to believe. But if you're them and you have an opportunity to create a token that you can print and monetize, I mean, come on, that's good for them.
Yeah.
Good for them. And if you're an investor and you want to try to make money on it, good for you. They're not a security, whatever, but that's your choice, you know?
So would you say you're more bullish on Ripple, the company, and them getting revenues than necessarily this XRP token reaching $1 trillion market cap?
Absolutely.
Ah, okay.
A hundred
I
percent.
think that makes
Absolutely. Yeah.
a lot more
Yeah.
sense.
Because everyone in the comments, I hope that did it. I hope everyone's okay.
Yeah, yeah. And the
Okay.
only reason that because I'm a real like Ethereum is probably where I just see the most happening, and it's been my favorite coin for 3 or 4 years. But recently it upgraded to. Did you see the Loopring Pay? One of the scaling technologies. It's got instant free
Yep.
transactions, and we've got all these
Yeah.
liquidities. So I just kind of see that what they're doing is just as good a product for everyone to use to send money around the world than maybe XRP. But anyway, we won't harp on about XRP. I'm sure there's heaps of others we want to talk about. So one of the things you just mentioned was Tron and stablecoins. Now I've got this thesis that stablecoins could surpass Ethereum and Bitcoin just because there's such a huge demand. Everyone's talking about the US dollar and the euro dollar outside of the US at the moment. Well, now anyone with a smartphone can get their hands on digital dollars. I just think that this is going to blow the world away in the next 2 years, and central banks and retail banks and governments are going to have a big headache about who gets to print money. If we print these dollars over here, they turn into these digital dollars or digital Chinese yuans. It's just this unstoppable force once everyone has a smartphone. So, yeah, Tron is interesting because when these chains get full, people move to these other chains. But I guess I'd just love to hear your thoughts on stable coins in general and where it's all going and some of the analytics you're seeing.
Yeah. So I'm in violent agreement. Stablecoins are part of the future of this industry. And maybe the early savior against ICO madness, right? The color to this industry was, everyone tried to get rich off these crazy ICO schemes. And if you ask my grandma, like what's this crypto stuff? She's thinking about like, that's how my grandma talks. Anyway, whatever. Okay. Stable coins, very real use case, digital dollar. We already are paying using our digital devices, and it's just like that, but that's interesting. So no question, actual use case. And actually, we get paid a lot in crypto in stable coins. Okay, that tells me a lot. We have a lot of companies who come to us and say, can I pay you in Tether or can I pay you in USDC? Yeah. We've seen a couple, you're starting to see the trends take shape, who's doing what. So Maker is actually being used for DeFi applications, while Tether is mainly being driven by arbitrage. Okay, so maybe Tether's more for the investor side of the house, and maybe there's real use cases coming out of Maker. You're seeing how these stablecoins work with exchanges are quite different. Some are working more closely with centralized exchanges. USDC actually works pretty evenly across both decentralized and centralized.
That's been really
tells you a lot about.
Yeah. Recently, you've seen USDC sort of get integrated more to the world of DeFi. And the other thing I was just going to ask you: have you seen the liquid side chain get involved with? Is that something you can monitor? Is because it's centralized? Is that a little bit more behind closed doors?
We can monitor some of that, yes. So I don't have on my at my hand, fingertips data, but yeah, we can monitor that as well. Yes.
Cool. That's interesting. Sorry to interrupt your train of thought, but anything else where it's all going on the stablecoin world? Because I think it's very interesting watching, particularly the USDC, something that's centralized, get integrated into something that's decentralized, and that is a conversation that's very much happening in the Ethereum community.
Absolutely. I mean, look, I think today PayPal and Venmo said they were going to integrate crypto payments into their systems. I mean, you're now seeing the true payment providers come and say, "Ooh, this is getting stable." I mean, we're using the word stable, stable coins, but like this is actually getting real enough that we could integrate it and trust how it's going to work. And so, you saw the stuff happen with Compound, and like there's all these signals playing out that the stable coin is the thing that's going to help carry this industry forward. And I would guess, the chains that are focused on DeFi, there's many that are sort of coming out of the woodwork. Kava is one that we do a lot of work with. We think is fantastic, built on Cosmos. There's another one called Ava, which is just launching. So Kava without the K,
Is that
which we
like
think is pretty
is
cool.
that a fork of Kava or anything, or just a similar name?
No, it's just a similar name. It's just a similar name. But they're, similar thing. They're focused on finance applications. And so I think the trend we're seeing from the companies we work with is where the customer is and where the energy is coming from those who wish to operate within the blockchain ecosystem
Okay.
is stablecoin and DeFi application oriented.
That's not the Len token, is it? Is that project, or
I
like, are you
don't
pronounced?
know.
Because some people pronounce it Arva and some pronounce it Ava. Is that, it's not AAVE? Or is that a different project you're thinking?
No, it's AVA.
Ah, okay,
I know
cool.
the other one.
I,
I know the other one you're talking about. It's
I
AVA.
might have to
Yeah.
look that one up later as well.
Yeah. Yeah.
Um, at the moment, you said sort of the big institutions are really interested, and I had a fantastic interview the other day. I can't remember who it was with, but they were talking about their big investment in EOS, and they changed their thesis, and then they had to sell their tokens and admit they were wrong. So, what are some of those big conversations that you're having? The interesting analytics that these people want to know about? Is it when they don't see the users coming, they don't see the developers? Like, I just love to get some of the decision-making processes that you get are privy to, I guess.
Yeah. So the first for most chains who are coming online is I have a group of investors. Okay, call them your Genesis token holders, call them your first investors, call them the foundation, whatever you want to call them. But I want to know what they're doing. And we've had a few use cases where there's contracts or whatever they're supposed to be not selling, or they're supposed to be operating a certain way, and they need to understand the movement of those wallets and their tokens. Okay, so that's I think of that like investor relations, right? I need to make sure my investors are behaving in the right way. If you go downstream from that, you might be an operating chain, and your what we'll call key holders, the people who maybe own big chunks of your asset, or they happen to work at a fund or an institution. I want to know when certain things are happening. When they move a certain percent of assets to an exchange, you probably have a signal they're getting ready to sell, right? Or they do a test transaction, very small. Okay. And so we've had a few say we send alerts when those types of things happen. Hey, I got to call up, person A and say, hey, how you doing? Are you thinking of selling? Or someone unbonds a transaction, or is changing their pattern of behavior. What should I do with them? So from the investor side, it's managing, understanding what your stakeholder is doing. If you're a chain that operates with more dApps, or other types of stakeholders that are maybe building on your chain, you're looking for signal in where's their trend. So we talked about DeFi. Are my DeFi applications attracting more customers, more throughput than my gaming applications? And what's the change? Or on Ethereum, are the trends happening between which dApps are growing and which aren't distinct from what's happening on my chain? Or maybe I'm trying to attract dApps. Which are the applications which are burdened by high fees on Ethereum and maybe most interested in finding their way to a new chain?
I'm just making some notes here, Dave, because you bring up so many interesting points. I don't want to forget what I want to ask you next. But
no problem.
It's funny that you're saying about the goodies and the baddies. If someone's meant to have coins locked up and they might be moving them, everyone thinks that Tether is the baddie in this industry. So going back to stablecoins, are you of the belief that Tether is printing out of thin air? Or I'll share my thoughts after, but I want to hear yours.
I believe that many companies in this space operate like a bank that can print unlimited money.
Okay.
Many companies. All right. I'm not the judge and jury of whether that's right or wrong. What I care about is how do you understand the behavior sets of a token once it's in the market? Okay. So I'm effectively dodging your question, maybe without dodging it.
Okay.
But yeah, what do you think?
So we did an interview the other day with Tan Louis, I think his name was, who has a book called The Ponzi Factor, and he talks about basically these days everyone can print money, but also people can print stocks, and we have all these stocks that don't pay any dividends. They're called growth stocks these days, but you never actually, the company doesn't ever give you anything, and you don't have any voting rights or anything. So that was really interesting to hear him talk about that. But I was kind of explaining crypto to him on the fly, and he was saying, oh, so these companies can just print more tokens, like they can print more shares, and basically it doesn't have any store of value aspect. If everyone could just print more Bitcoin, people wouldn't be holding it very much. But that is super interesting that you say that. I'm actually of the belief that Tether is legit, and there's no way they could have been through 3 or 4 of these huge market cycles and have whales take profits on hundreds of millions of dollars. And I've got friends that are shareholders in Tether and Bitfinex, and they get paid out these big dividends each month. So I'm actually a belief that it's all legit, and it's just the banking problems that have caused them the headaches. So when you say a lot of companies are operating like this, is that similar to how the traditional financial system works, where you can print more money, you can kind of run a fractional reserve-ish model because you're never going to have 100% of people come in and redeem? Do you think that is happening a lot in the crypto world? Is that kind of what you're getting at?
I do think it's happening a lot in the crypto world, and I think it's there are cases where I think it actually generates the right behaviors, where companies are operating more like a financial ecosystem, and there are ones where I think it inhibits behaviors. If I ran a startup, okay, I run an analytics business. We don't have a token. We're a team of data scientists who do things, and I could be like, God, it's not going so well. You know what? I'm just going to print another $10 million, and I'm gonna run my company for a long time. That's behavior doesn't, that's not making me run a real company. That's making me, pay people money to not succeed. Okay, so I would say there are companies that probably exist because they can print money, not because they're dedicating a service to this industry that's going to be here for the long term. I think it's probably why a lot of people look at this industry and go, "What the hell? What's happening over here?" Right?
Yeah. Are we still talking about crypto, or are you talking about the Federal Reserve and the 20% of zombie companies?
I mean, absolutely. Look at what they just did: $1 trillion of blank, and handed out to people, and you're going to have to pay it back. I mean, it's ridiculous. Yeah, it's crazy.
I mean, we're joking about it, but it is literally exactly what you've described, where people are printing more shares, printing more debt. They can't, I don't want to go off on another tangent, but what do you think about what is going on in the US economy? And I guess globally, do we just need to
train wreck?
Need to have the recession?
Yeah, train wreck. I mean, I don't want to talk about our leadership because it's embarrassing, but we are not considerate of the next generation. That's what's happening. And so, I mean, we've all seen this story before, that the music's going to stop at some point, and there's a lot of money that doesn't get paid back, and that's going to cause a lot of pain. No. So I don't know how that ends. Maybe it's the ultimate scenario for crypto. I mean, this could be it,
Yeah, you joke about leadership, but Australia had 7 prime ministers in 7 years at one stage. So
you've had your share.
No. Yeah. So these other questions I had. The day that we had the flash crash, did you see any interesting movements? Because as I said, I'm a big believer that the price only got that low because of the 100x trading and whales and the matching engine. I just think that I was lucky enough to buy some in the low 4,000s that day, but anyone that got to buy that day, I think, was just so lucky with all the coins. Did you see some panicking from some of the people you talked to, or was everyone just licking their lips saying, "Wow, this is a gift"?
So there's if you look up there, we produced some research about that day, but it was from a slightly different angle. We looked at what fees certain exchanges were still willing to pay throughout that process, and so we took all the exchanges and said, how do they actually operate? And how does their fee behavior change? And so you saw a couple exchanges have an unlimited willingness to pay whatever to run transactions as fast as possible. And you saw most have a clear flat line where the fees got above and their trading just basically stopped. They didn't do the executions, or they slowed or whatever. So I think what it told you more was which exchanges are going to continue to operate when black swanish types of events or highly volatile events occur in the space. Now you can, depending on what you do in the space, that could either be an opportunity or a risk. But I would go look that up. Some pretty fascinating data came out about which exchanges and how they pay for gas.
Yeah, okay. I think just yesterday I read that BitMEX have continued to see these huge withdrawals since all that happened, and FTX is one of my favorites at the moment because they're coming out with some innovative products, and I think they passed or caught up to BitMEX in terms of volume. But any thoughts on exchanges? Like, are you a trader at all, or do you just like to stick to the clean ones like your Coinbases and your Krakens? Or
well, we track. What our algorithms do is when they go into a chain, using behavioral patterns, it immediately identifies the exchanges, all their satellite wallets, and all the interactions between them. So we can see not only assets moving to an exchange or from it, but inter-exchange when exchange is right, and intra-exchange when stuff is moving between just the exchanges. And so that gives you actually quite an idea of you might see transactions moving, and the reality is just an exchange moving stuff in between their wallets to do for a variety of different things. So we do track them and we label them. So we have many hundreds labeled, many of the DEXs. And what we look for mainly for our customers is behavior patterns that would indicate where to create value. If if you're, I mentioned, Gods Unchained, which is in your neck of the woods before. If you know that the places people are getting Ethereum before they go buy a card, buy a God through the system, and you know which exchanges they go to get that Ethereum, that might be a really smart place to advertise. Right. And so we'll look at the exchanges from that type of healthy ecosystem. Like, yes, we care about who has supply, and sometimes we do that for investors. I'm not a direct investor in that way. I own a bunch of crypto, but I'm not a trader in that way. But we care more about patterns that would influence customers more than anything.
That's for those that aren't following along, Gods Unchained is a digital cards game on Ethereum. They're Aussie guys that we covered very early on, and they've become one of the most successful companies now. I think they're the number one NFT in terms of on-chain transactions, or top three, I think, anyway. But that's a really interesting point, and that's where this world is going. What's the movie called, Ready Player One, where they live in this sort of digital augmented reality? That is just, The Matrix is my favorite movie, and every day we go towards this reality where we're going to have digital stuff around us. Maybe your ads are going to be in my lounge room, Dave, but I just think that that's the next step in all this evolution.
Yeah. Look, this is really good for the industry. Think of it like the internet, where until the internet understood how to enable good customer behaviors to attract audience to grow, right? How do people begin to use Netflix or Amazon or, the internet? Amazon learned that their customers were over here and they needed to bring them over here to begin buying. Okay. And so, you want companies to begin succeeding, whether it's DeFi or a game. You want them to begin succeeding, and the only way they succeed is if they start to know where their customers are and how to bring them to them. On top of all the technology, the decentralization, all the wonderful stuff people are building, that's when the space matures. When these organizations can know how to grow. That's the most important thing.
My mind's just racing at the moment. Like, even on the Gods Unchained website, you could, or maybe that's a bad example, but somewhere else you might have, Kyber advertising, the best place to trade assets after there's been another ad about a coin, and people go, oh, I want to buy that. And then they go, that's how I buy that. And it's just the funnel.
That's right. And maybe it's not even an ad. Maybe you get a message in your wallet, okay, that we know that you just transacted on this exchange, and the message says, we'll give you 10% off of a Gods Unchained, right? Of a God, or go to Kyber and get 10% off your trade, or 2% or whatever, or faster processing, whatever it is, right? Doesn't have to be so in your advertising. For me is like so in your face at this point. What else could you do to make the transaction better for you?
And I think,
right?
I was going to say I think that's one of the reasons why Binance bought CoinMarketCap, because there's just the number one traffic site in crypto. But then we also saw eToro buy, I think, was it the Delta app? So these guys are buying the things that have eyeballs, and that is what you do in the marketing world.
That's right. Yeah, where are the customers? I'm going to go now know how to engage those customers to use my service. Those are good signals to me. I think they're very powerful signals.
Any other like big companies? Facebook's move into Libra, it kind of got pushed back. Now they've launched again stablecoins and payments in WhatsApp. Are you seeing any other big companies like Apple sort of launched Apple Pay, but it's just a matter of time really until like everyone has some sort of crypto strategy or plan, isn't it?
Yeah, I think, I mean, we mentioned PayPal and Venmo. I think the Square, you're in Square, God, Jack Dorsey's so, he's so cutting edge. He is offering Bitcoin through the app. You're over the, like, it's so rare. You're getting to sort of the mature companies willing to do this. And so, I think we're flipping from which are the one or two companies that are doing this to which companies don't have a strategy yet.
100%.
Right. And that is, it's happening right in front of us. Like, we're all watching it sort of happen, sort of like, yeah, but that's massive. There's a point in this universe where every single company is using these tools. And then it's truly like we've accomplished why everyone's been so excited about it for so long. Right. I think it's right in front of us. And we talked about our market in the US. That's what's causing some of it.
One of the things that we often say on the channel is nobody wants to be first, then nobody wants to be last. And you sort of saw that in the retail side of things. But now you are seeing it in the tech company, like the payments sort of fintech space, I guess. But the next wave also is the Paul Tudor Joneses and the big investors, the more forward-thinking investors. We're starting to see that tipping point, but then it's the more wider investing space, and then it becomes the funds. It's like, if crypto has another good 2 years, why aren't you giving me exposure to crypto in my fund? And then obviously even the central banks have all got exposure to gold. The smaller banks say, we've got nothing to lose, our currency's trash. And they're all of a sudden they've got the best performing currencies, and the other central banks say, well, geez, I don't want to be last. So that is just the tipping point. Whether that's a few months away or a few years away, I just don't know how anyone can not be bullish on this space.
Yeah. Cherish this moment, because you and I are in it every day, and we hear all these signals, et cetera. But like, you look back in 10 years, it's going to be like, I don't think I've ever been in an industry which created so much transformation in real time, right? And sometimes when it's right on top of you, it's hard to see all of it. And then when you get way back, you go, whoa, wait a second. It's all changed. Yeah.
Every now and again, I get these gut feelings, and I've had one this week when Ethereum is just sort of treading water around this $220 mark, or Bitcoin's just treading water around 10K. It's just, I think we're just going to look back and go, once it's at 14K, let's say in 3 months' time, people will go, oh, geez, like Bitcoin was just sitting there, or Ethereum was just sitting there for so long, and I thought, oh, is it going to go up or down? And it's just going to appear so cheap in hindsight. But let's not talk about price too much, Dave. A lot of these new projects have the staking, and that's caused the lockup. So Tezos was one we joked about in the pre-interview. About 80% of the coins are there to lock up, and I think that's all well and good when it's flavor of the month and it gets a bit of momentum. But at what stage do they become maybe like an EOS? I think in the last few months, people have said, well, where are the dApps? We saw a report saying 90% of the developers have left. It's all well and good to all have these coins and lock them up and stake, but if there's nothing happening, that can all sort of lose its fundamental value pretty quickly.
They're going to go away. And I don't know if EOS is going to go away, but the ones that don't attract audience won't be here. I think EOS has missed a major opportunity. They've squandered. But we go back to that. You get, I don't know what it was, 4 billion in ETH at one point. You're three guys who stumble onto $3 billion, $4 billion. You go, I don't know. Maybe I'll buy a Maserati. I don't know what I'll do. Right. So I think they squandered it. I look at Cello, right, who's building the Alliance for Prosperity and actually building apps for social good. I look at Flow, who is who's already partnered with the NBA and UFC and Warner Music. Near, there are real platforms building real applications. I think you're maybe seeing the first wave. Alta Vista, maybe EOS. Right, and Google hasn't shown up, right, and that's coming.
Yeah, again, Flow is one that's really under the radar. There's a lot of Aussie guys that we've met and spoke to working there. I think EOS have got to hit a home run with voice with their social media platform, and if that is a real mess, then, as you say, how on earth can you just squander $4 billion, and it'll be coming up on 4 years at that point, anyway.
Or you're doing a good job at making interest off of it. Maybe no one's squandering anything. Maybe, maybe they're just making money.
I think it's amazing that Ethereum. I did a big write-up about this week for our members about how Ethereum got to ride the wave and ICO booms caused all the ETH buying and all the lockup, but then it also caused it to bleed to death. And I think EOS has openly said that they were selling ETH and trying to make money, but also dump the price of their competitor. But ETH has sort of come through that now, and I think that DeFi and staking is going to be a way, way bigger driver than ICOs. So did you see any interesting metrics throughout that period of all the ICOs and then all the ICO dumping? Have a lot of projects got rid of their treasuries now or failed? What are you seeing there with all the ETH drivers?
Yeah, so I'll focus on a slightly different area of that, which is our FCAS metric, which rates fundamental health, is 3 components: developer behavior, customer activity, and market maturity volatility. I will say that the first 2 are about 94% of our rating. Okay, so FCAS is not a measurement of true volatility. It's a measurement of health, right? Are people building and are customers being attracted? Those are the 2 things. What we saw through the early wave there was developers putting a lot of code into the system. And these organizations were doing a lot of things to implement and create change. So we talked about Ripple earlier. You could actually predict a lift in Ripple price by looking at the developer behavior within our FCAS rating, because before Ripple was about to launch a big relationship with, say, a bank, their developers would do a lot of work QAing the code and checking it out. And so you could see that lift, predict price. Okay. What's shifted, though, in the past 2 years is that development behavior is sort of flatlined, maybe dropped down a bit. Code has been built. It's stabilized for many of these folks, and their user numbers are starting to rise. And so the series there is you used to be able to compare developer behavior and understand maybe price movement. We may be entering into an era where that customer behavior is a better indicator of price movement, because that's where there's actually action happening.
And that makes sense. And that's what it was always, I guess, about. After the 2017 bubble, and it was the same as the .com bubble. Okay, right, let's build something. And the next wave is going to be about who has customers and who has revenues. Some of these DeFi platforms now do have measurements where we can start to build PE-ish sort of ratings, like Kyber and their fees. Have you got any favorites or things that you've just noticed the growth of been really clear and stand out lately in that space?
Maybe I'd just say no.
Okay.
Maybe here's what I'd say. I'm not the data scientist, so I'm sure my data science will give me some. I don't have any that come to mind to answer that specific question.
So you're not a fan of DeFi at all, or?
No, I'm a fan of DeFi. I'm not a fan. I'm more. We have a lot of customers, and I'm trying to be conscious of what I can and can't talk about.
Okay.
Maybe that's
I'm getting a sense that, and I tend to agree that just because these things are going well, there's still some overinflated valuations and a lot of excitement. But yeah.
Yes, that's probably a good.
Cool.
Thank you for saving me. That's good.
I do think overinvestment is necessary, though, for the best projects to come out the other side. But anyway, moving on. So gaming space, you mentioned Gods Unchained. I'm a huge fan of Engine and the metaverse and stuff that they're creating there. Do you guys keep an eye on like the non-fungible tokens and other ERC 721, 1155? Are you looking at all the different types of tokens?
So we are. So we put out. There's another report you could look out there, which we do track this. So we just put out a report that shows CryptoKitties generated 27 million in their first year of revenue, but importantly, 7 million went to the company and 20 million went to the breeders, to the people. Okay, so that's important, right? And Gods Unchained, 4.2 million in the first year. Players have since earned about 250,000. There were no auctions in the first year.
Yeah.
My Crypto Heroes, 1.5 million in the first year, and players earned about 118,000 through selling their in-game assets. So you can start to see the behavior patterns. Where can I, maybe as a player, where can I go make the most money? Are these companies succeeding? Things like that. Those patterns we will analyze. We'll publish a lot of it publicly to help the market understand what's actually happening.
Fantastic. Well, David, I think we're getting up on an hour. I've absolutely loved this. I'm sure everyone's going to be asking for a part 2 or to get you back. But is there anything that we haven't touched on yet that you think is super exciting at the moment, or your favorite analytics to look at?
Well, I'm going to have to go to. I have a book coming out on Tuesday of next week. It's called The Humility Imperative. It's 37 essays on leadership and a lot about humility, and frankly, a lot about not having humility. You can get it on Amazon and Kindle and paperback.
I'll link all that down below for everyone.
Link below. Next week it comes out on the 30th, and next week it's 99 cents on Kindle.
Okay.
So if you're gonna buy it, that's the week to buy it. But I'm highly biased and I'm overly confident, but I'd highly recommend it. There's my plug.
99 cents. I think everyone can afford that at the moment.
Yeah.
No, that's been fantastic. I mean, it's so early here. The sun's now in my eyes, which doesn't happen very often, and the sun's setting where you are. So we've got a couple of flat earthers that pop up in the comments from time to time, Dave. So I'm interested to see what they say about that the sun situation on the other side of the world here. But no, that's been awesome, mate. I just love what you guys are doing. We love getting around to these analytics, so it's one that I'm going to have to cover more often. We might even see if we can get you guys up on our website regularly for people to check out. But yeah, it's been great, mate. I've really loved it. I'll put all the details to follow Dave as well down below. But any final words?
No, I'm excited you're covering this type of stuff. I think you're doing a great service to people, highlighting some of the important things in the industry, and keep an eye on customer growth as a metric to invest behind. I think that's coming sooner than maybe you think.
Awesome. Okay, thanks, Dave. We'll have to do it again soon.
Thanks, Alex.
See you guys.
Okay.